the importance of doing your own work is something else that I picked up because here I am learning under Linda, for example, and Linda has done countless hours, hundreds of hours of previous research, has all the statistics to go alongside of it. And yet, it wasn't until Linda had given me this task to perhaps print out a handful of charts for 20 futures markets and take the time to go into the library and study in depth what I myself see in the charts. And what that really does over time is it helps to build that confidence factor.
Welcome back, everyone. Today I'm sitting down with Cal, who is the assistant for Linda Raschke. Linda is someone we had on the podcast before. Cal is a full-time trader who's going to be able to share a story, kind of give some tips on how to proceed, how to trade profitably long-term, and how is it to kind of manage money and trade for someone who's pretty good in trading, a pretty well-known person. So Cal, welcome on the podcast. How's it going today?
Oh, it's doing very well. Good to see you and nice to make your acquaintance here. Pleasure to be on the show.
Yeah, pleasure to connect. And it's good to talk to you. I think we've been trying to schedule this for a while now, but finally getting to kind of sit down with you and kind of discuss. I want to go back in time and tell me first about kind of what you do these days exactly in trading.
Oh yeah, absolutely. So these days, as you had mentioned, I had worked as an assistant with Linda, and Linda's husband, Damon, is also a trader. And currently, we're doing a trade room where we spend time with other traders, and we operate with the futures markets throughout the day. We kind of start at 8 a.m., so we're behind the screens most of the day. So we have a few clients that we provide guidance and commentary to, helping them with their trading, pointing out good technicals, kind of providing some guidance throughout the day. Should an opportunity present itself, kind of helping them to, perhaps monetize on that should an opportunity arise. And then outside of that, for myself, I kind of started with options primarily. So still to this day, I am involved with the options market. I have obviously increased my exposure into the futures as well, with the help of working with Linda and Damon, since I didn't have much prior exposure to working with futures. Mostly I use, operating in the micros, slightly smaller contracts, since I am slightly earlier on the curve. But it's been a great learning process. So these days, we're active in the markets. We stay behind the screens most of the day, or basically the 8 to 4 o'clock during the U.S. session, and then we do some preparation in the evening as well. But yeah, up to date currently. Enjoying these markets. We have gotten some nice volatility as of late. So yeah, there's never no shortage of excitement with the market. So that's what I've been up to mostly these days, operating the trade room, knocking around in some futures myself, and yeah, not too many complaints. These market environments have, certainly presented their challenges, but overall, it's been a decent swinging environment to work with. Good opportunistic trading available there.
Interesting. Let's go back in time. I want to hear about kind of what got you started in trading in the first place.
Yeah, absolutely. It's a quite an interesting question. So, growing up, I always, had a little tendency towards, being financially secure, and my father had worked in business, so I always, gyrated more towards the business side of things, and I generated an early interest in the markets. I would say, at the tail end of middle school. So I started my knowledge, my research very base level, just looking at equities primarily. And then as my education furthered, I proceeded to go to a university, and I wanted to study under finance, a finance degree. And as I first started, I was under the impression it would be more related to the financial markets, and the traditional finance degree nowadays focuses more on the corporate finance, so more about financial statements, balance sheets, and the fundamental side of companies, which certainly has its value. But it took me a few years into the degree until I really made the realization that it wasn't too heavy on the financial markets. It was very much more so on the company side of things. So I then proceeded to do some individual research on my own time, and I started with the interest in the options market, derivatives, just because it offered a good amount of leverage without having to put up too much capital. Since I was still in university, I did have somewhat of a capital constraint, so it was a nice way to get my foot in the door, of course. And that really opened a whole rabbit hole for myself, because the vehicle that you select to trade is one aspect of things, and then you have the technical analysis side of the equation, which is obviously of the utmost importance. But to further along my path here, I went to the university setting, and then I did a secondary degree in a more CFA guided curriculum, certified financial analyst. Once again, more on the corporate finance side. And I had showed my continued interest in the financial markets to my professor, and word of mouth, I was able to get in touch with Linda. And this is back in 2018 now, so it's been a little while, and it's been a pleasurable experience. And from that point, I was able to get in touch with Linda, and we had a few discussions, and that was my first real step into the futures realm. And lo and behold, initially I was going to start off as an intern, helping her out since she had injured her wrist. So I was more of the man doing the execution alongside providing some other assistant duties just to kind of be a sidekick there. And that ended up turning into um, um, a longer process. And here I am today, still having the pleasure to work alongside Linda. So it's been a true pleasure, and we've had many developments along the way. Like I said, up to date. To kind of bring the circle around, I did plenty of execution for Linda over the past few years. So I was able to not only learn the technical side of things, but also when it comes down to, quote unquote, pulling the trigger and actually clicking the button to get in the trade, and how active management actually takes place. And then shortly thereafter, now we're in the room with Damon and myself, trading during the day and providing good guidance. So it's been an interesting journey nonetheless. And I'm sure many of the folks watching could agree that it always does seem to have a few twists and turns on our learning journey. And up to date, it's every single day we seem to be picking up something new and learning something new. So that's kind of been my journey up until this stage. I'm very grateful, but certainly started more on the university setting, more on the corporate finance, and then was very lucky and happy for that matter to dovetail closer to our financial markets and more of the trading aspect of things, which has been really exciting for myself and has kept me really passionate. Like we said earlier, these markets always present good opportunities. So every day we're seeing something new or seeing some new good excitement to work with there.
Definitely a lot to learn there, I'm sure. And how did you connect with Linda? Because people might feel like it's tough to connect with other traders sometimes, or they feel like because they're at a stage that's different from like being professional already, that they wouldn't be able to connect with like a good trader out there. How did you kind of connect with her? How did that happen?
Yeah, it's a great question, and especially nowadays, getting in touch with another person is sometimes difficult. And in this case, I was very lucky. It was a referral to a family office, which was near the location of my university at the time. Linda had reached out to this family office looking for an execution assistant. And basically to go in, like I mentioned, since she had some issues with her wrist, to go in there and actually place the orders under her mention, like she would mention to buy or sell, and then I would go ahead and do the execution. So she was asking this family office for if they knew of any people that would fit the bill in this scenario, more of like an intern style. And word of mouth, this family office reached out to my professor, and one way or another, we were able to get in touch. So in that case, it was just being in university, but also showcasing very clearly how passionate I was about the about markets, futures, trading in general. Because for my professor, the moment that he heard about that, I'm sure that I was one of the first people that came to mind, despite not necessarily studying it in school, but just the sheer passion. I think that really helped get me in the door, even though it was a little word of mouth there that actually got me to first to speak with Linda. But yeah, it was a great pleasurable experience. So from Linda to family office, and then to the university, and I didn't even speak with the family office much. It was kind of just a referral, and that was lo and behold kind of the main item there, the little pivotal point in my early financial career, I would say.
I'm sure people are going to want to know what are some things you've learned from Linda? Like, what are some of the lessons? What would be the main lessons you've learned? But I'm sure there's a lot more than one. So what would be some of the things you've learned from Linda that really you can apply to trading?
Yeah, that's a superb question. I could probably write a full novel on the topic there, but it really does bring it brings to mind a few things. First off, working with Linda, I came very quickly to realize the amount of passion that she had in the markets. And this rolls into a few things because when you're passionate about the markets, you're more apt to spend more time doing it. You understand all the implications of it, meaning that it also requires a good amount of patience. The learning curve for the markets is can be quite steep. The impression sometimes is that by the nature of leverage and things that you will have success quickly on in your career, but it's not quite a linear path to trading. And that was one of the more critical items that I picked up that, compared to a perhaps a normal occupation where you have a linear relationship. How many hours you put in for work, your pay or your output would directly correlate to how many hours you put in. And the market is slightly different. During your early phases, you might have a few successes, so it gives you a nice early start, and then you might start to plateau, which in a traditional job is unusual in some cases. So having that patience and that passion towards the markets can help keep you in the game. And that was one of the largest things that I picked up. But also alongside with that, and these are two topics that talk a tad more about the process and diving more into the technicals and the charts. But the the patience in the process, so understanding that you have to be very consistent in your operations. If you have a particular game plan or setup that you like to follow, it's very important to be consistent in that. You don't want to alter things too much. So for example, in the evening, if we're setting up our charts for the following day, we like to try to keep that around the same time each evening so we can get in the routine and used to that process, because the markets are unstructured, if you will, versus a normal occupation. There's no hard set rules. You kind of have to set those own boundaries or rules for yourself. So having that consistency and the patience to really deploy that is of the utmost importance. And then also to kind of work on that process aspect, the importance of doing your own work is something else that I picked up, because here I am learning under Linda, for example, and Linda has done countless hours, hundreds of hours of previous research, has all the statistics to go alongside of it. And yet, it wasn't until Linda had given me this task to perhaps print out a handful of charts for 20 futures markets and take the time to go into the library and study in depth what I myself see in the charts. And what that really does over time is it helps to build that confidence factor, because if you're following along with someone else's work, which is absolutely okay, what's nice to do is perhaps put your own spin or your own little twist on that same topic, just to kind of make it wholesome for yourself. Because what we'll run into if you're following a system or a strategy that you haven't done enough research on for yourself, you won't quite have the confidence factor. And perhaps if there's a few losing trades in a row, you might lose confidence in general, and you might think that the strategy or system is not working correctly. When in reality, had you done your own work, you might realize that that's typical for the model or typical for the statistical probability. So that process of kind of doing your own work and studying the concepts on your own time and your own perspective, or even viewing it through your own lens. That's a, kind of a topic or a little saying that people say, viewing this particular item through a different lens. And that really does sit quite well with me, because it wasn't until that I started diving into Linda's concepts on my own perspective, seeing how I understood them, perhaps maybe making a small twist or alteration, like we had said. And that really has enabled me to increase that confidence factor and feel better about the statistics in general when you're able to hone in on them and not necessarily recreate them, but make them a more valid for yourself, because would run into issues with the confidence factor, should you have an issue with a few trades in a row. Whereas if you've done your own statistics, you'll feel a lot more comfortable and confident that that might be within the threshold or within the reasonable norm for that particular model. So just to kind of regroup there, some of the more pertinent things that I've learned from Linda. Certainly, her passion towards the markets is outstanding. The consistency in the operations, being continuously going through the same emotions, trying to keep it very level-headed there. Patience, more so in general, speaking about the process of beginning to learn to trade and understanding that it's not going to be an overnight success, as well as finding a process for yourself. I love this saying that Linda has. She almost makes the market into a board game. So she mentions that setting up her charts in the evening is like setting up a chess board or a checkers board. Getting yourself all geared up, and that continuous process really enables you to kind of continue playing that game. And then lastly, a very key and important point, the importance of doing your own work and studying your statistics for yourself are certainly some of the key pillars that I would say that I picked up from working under both Linda and Damon.
Yeah, I'm glad you mentioned this because a lot of people think that you could just like be given a strategy either online or to like a mentor, like Linda, of course, a lot of other people. And if you just get a strategy, you could just trade it in the market profitably. But there's a lot of factors that go into it, and like you said, making your own touch to it makes a big difference in the end. It's like you customize it for you, what you believe in, your personality. What are some of the changes you had to make to kind of tweak what you've learned from Linda to make it your own?
Yeah, that's great. So, for example, something even as simple as looking at a divergence, perhaps, which is just simply trying to highlight a shortening in the length of a swing, or a loss of momentum. And that's one of the early items that I latched onto. It's something that I gyrated to for myself. And early on, when I was working with Linda, I would continuously point out what I was personally seeing or thinking or alluding to as being a divergence. And I was thinking under the mindset of that linear framework that we mentioned earlier, thinking that everything is going to fit in this perfect shape or textbook formation, which these markets never quite seem to give us that exactly perfect feel each time. So what I've been, or one of the more difficult things that I had to do for myself, is trying to integrate all that work and perhaps taking into account a higher time frame. So if we're looking at 5 or 15 minute data, perhaps I'd like to be more so aware of that 30-minute, hourly, 240-minute, etc., just to give us more context around the idea. And that took some time to really grasp for myself. And it wasn't until I started seeing them getting, we call it screen time, getting your screen time sitting behind the and watching all the trades and charts unfold. So it wasn't until, perhaps 6 months to a year where I really started to understand the concept behind these divergences, and to kind of make them my own, or, put my own spin on things. I just needed to see enough variations of it, or, nuances. So if I would see a divergence and it perhaps didn't play out or didn't revert back to a moving average, I might then go in and see perhaps as to why that didn't happen. So being able to adjust yourself and, like we said, kind of putting your own spin on things. And it doesn't necessarily have to be anything altering the underlying prospects of what the model might be. In this case, we're talking about divergences. So it's just a matter of seeing enough examples, and there are so many factors, but perhaps in this case, we have a nice impulse bar to the upside, a nice green candlestick bar, some brief consolidation, and then another nice green impulse bar. And what we can note are, some items that I've picked up on, if that momentum is still quite high on that second swing or that second impulse bar, that can be indicative of that higher time frame starting to kick in there. So helping us stay out of trouble. Using that higher time frame context is something that one took me a lot of time to to get to, and the way that I did make it there was just seeing enough variations. That's kind of the key word there, variations on a particular theme. And you had mentioned a lot of the traders initially early on, perhaps latching on to a particular strategy or study. And I think it's a great point, and it's difficult for some of the newer traders, perhaps. I mean, myself included. I came into the markets when we were fully computerized. So, as we all know, there's numerous indicators, oscillators, strategies out there, and it can be quite overwhelming at first. And for myself as well, early on, the traditional mindset would think, okay, the more advanced or more complex that my charts are, I must be doing something right. And over time, it's almost interesting that that's almost further from the truth, that I've watched Linda and Damon, both professionals in their field, operate perfectly fine with no oscillators or no, moving averages, things of that nature. So it's a supplemental aid in our operation. So that has always been something to me that I found interesting. And just to kind of dovetail on, putting a spin on some of the things that we've learned, putting all these kind of synthesizing them all and wrapping them up to understand that what these oscillators or patterns or technicals are trying to do at the end of the day is just showcasing what's in price. Oscillators, moving averages, they're all derivatives. They all come from price. So what they're doing is they're taking, either the high, lower close from our data, whether it be 5-minute, daily data, etc., and then manipulating it in one way or another, dividing it or multiplying it, etc., manipulating that same set of data to just help smooth out things, to bring our attention to these, you know, uh, more technical points where there might be a better breakout or a better reversion to the mean. But that topic is always one that I like to dive into, is the fact that nowadays so many oscillators, so many technical patterns, indicators, etc. And at the end of the day, a lot of them are just derivatives of price. So if you spend enough time understanding core technical principles, swings, trend reversal, swing highs, swing lows, you will be able to extract a lot more value from the oscillators, because like we were saying, it helps smooth out what we're already seeing in the price. So I know it kind of went off topic there just a tad with respect to, putting our own twist on other indicators or technical patterns that we might see from others' work, but it all kind of works together one way or another. Just hinting at the point of, once again, doing your own work, understanding that there isn't necessarily a magical indicator or technical setup that's going to be 100% a winner. So it's a great topic, and hopefully I was able to answer the question to some extent there with working under Linda.
Good answer for sure. You mentioned kind of taking away indicators, which is definitely something that people want to do a lot. I'm sure some people are going to ask kind of what are some things you trade or you look at. Maybe if you want to share your screen, explain that. That would be cool. Up to you how you want to kind of share this. But what would be some things you look for in the market?
Yeah, absolutely, a great topic, and I will indeed pull up a screen here in just a moment, and some of the more pertinent things that we keep an eye on, like we had mentioned in brief. Swing highs and swing lows are some great data points. This screen that I have up here currently is just an example of what I keep up during the day for our trading room. And don't feel overwhelmed. These are all very there's nothing too flashy or fancy here on the charts. Our main oscillator that you might see, the green and the red, is just simply the difference between a 3 and a 10 period simple moving average. And like we said, it's helping to denote what we already see unfolding in our price. So we get a nice healthy impulse bar. We'll see that reflected in the oscillator. But outside of that, to the point about some of the key points, These are our daily S&Ps, our kind of primary market du jour, if you will, our go-to market, our bread and butter. So these are just set to daily bars here. And in today's case, this was not even a bad example of it. At the very tail end of the day, we had our kind of key reference point was the high from the trading that was done on the first day of March, yesterday for our U.S. folks. So at the very tail end of the day. That's a nice visible data point. So for our operations in the evening, myself, I don't want to dovetail too much, but I have this tab here handy. This is an example of our homework sheet. So this has a list of all of our markets here on the left-hand side, our index futures being at the top, our S&Ps, our NASDAQ, our trusty DAX, nice to have in the morning session, as well as our currency group. So we have the Aussie, the British pound, Canada, dollar index, etc. The yen's in there as well, alongside with our fixed income. So the 10-year notes, our bonds, 30 years, and then basically the full boat for the futures, the crude, the gold, the metals, and then also the although not very active, the grains and the meats as well are nice to look at. And this is just a very rough idea of some of the items. Each one of these columns has significance in what we look for. So what they're going to highlight, for example, here on this Australian dollar or the Aussie dollar, it's flagging as an ID there on the sheet. And what that would mean here is that if we go to our daily bars, it's just denoting the fact that we had an inside range day today on this Aussie dollar. So this initially kind of is just a brief scan. It'll pop up certain things that might stick out to me. Like we said, the inside range day catches my eye. NR7, a narrow range of the past 7 trading days. So that's some of the preparation that we might look at in the evening session. But back to some of the core items that I keep a watch on throughout the trading day. These blue bands that you see bounded around price are simply Keltner channels. So they're an average true range function centered around a 20 period exponential moving average. And there's no rhyme or reason, no perfect band or look back period to use. It just helps give us that visual feel and price that for some of you might be familiar with spatial relations. So the Keltner channels aim to contain a good portion of our data. So what's nice to see is that our blue bands here, if we're starting to see a market push outside or test outside one of our boundaries, you can somewhat think of it similar to Bollinger Bands, although Bollinger Bands are based on a standard deviation function, whereas these Keltner channels are based on average true range. So similar in some sense, but for our purposes here, the average true range tends to smooth out the data a little bit more. So back to what we were saying about the Keltner channels. When we get our pushes outside the Keltner channel, since it's centered around a 20 period moving average. And then our upper band is 2.5 average true ranges above that. So if we're pushing outside that upper Keltner channel, it's letting us know that the market's alive and it's got some activity going on, or perhaps a supply-demand imbalance. So it's good to help frame out the data, similar to looking as a nice momentum reading. And we can see that is one aspect. And to tail off that, this obviously it's not very active here in the evening session, but this little gray box that we have here on the screen is our KC scan, our Keltner channel scan. So if a market is indeed pushing outside the Keltner channel, similar to how we looked at that grid with our futures listed off here on the left-hand side, we have a similar idea here. This is the same group of futures, just set to a 5-minute look back period or 5-minute data that it's using. So during the day, if we start to see a few items flashing red on the right-hand side, that's letting us know that the market's pushing down outside its lower Keltner channel. So what it does is it brings our attention to that market. So then we want to inspect it further and say, okay, if this market's moved far enough from its average, it must be in play. There might be some opportunities arising. So it probes us to go in there and look further into the charts and see, are we potentially forming a divergence, a loss of momentum, etc. So those are some of the main items that you see there. So we have the 310 difference between a 3 and a 10 simple moving average. Our Keltner channels similar to Bollinger Bands, but they're based on average true range as opposed to standard deviation. And then our nifty Keltner channel scan, so indicating when a market has, came to life or is testing to the downside. And then on this far right-hand side here, this is kind of more for the equity traders out there. This is a nice handy scan here, and all it is, it says a predefined list of about 200 individual shares. And what it does is it populates blue if the share is making highs on the day, and it's just set to a 1 minute look back, so it's capturing it in that moment. So if we're up here, for instance, at the close, going into the end of the day today, we had the whole board lit up blue and holding blue. So we had some good buying at the tail end of the day. For example, this AA happens to be the first one on the board there, and we can see that this was on the close here. So it closed on its high. And when we're coming up to test a key point of interest, perhaps the previous day's high, like we were mentioning there with these S&P data, what we're going to want to see if we're going to trade through a key reference point or resistance area, we really want to see that board lit up blue and stay lit up blue, and perhaps some of our bigger weighted shares. That's another factor to consider, is we can have the board painted blue, but you really want to see some good leadership, perhaps from the small cap shares and or the blue chip, Apple, Microsoft, Amazon. It's always nice if you're coming up to a big level, you want to see good support from both the small caps and the bigger market participants as well. So that scan's quite helpful. And then vice versa, of course, the red here with the VXX on it. These are the names that have been making lows on the day. So this is kind of my go-to screen here. And then lastly, we just have our VIX, which I'm sure everyone's familiar with, an exchange transmitted piece of data. So our values on the VIX won't change. And then we have our market breadth or our advanced decline figure there, number of shares testing up versus number of shares testing down, a broad-based internal, and a difference here on the breadth versus the VIX is that the breadth, depending on what trading platform you're on, might be slightly different in its numerical value. However, the trend and shape of that market breadth should be quite similar, so it's just dependent on what database of shares they use to compute that. So we got our VIX, our breadth, shares making highs on the day, shares making lows on the day, and then our nice Keltner channel scan just to help bring our attention to when a market's coming to life there. So just a few things there. And then, like we said, marking off these pertinent swing highs or swing lows. And always good to have, for example, two well-defined data points. So if we're looking at this hourly time frame here on the S&Ps, what sticks out to me off the bat are these two tests that we had on the 28th of Feb. So I would go in and mark that off as just being a reference point, a little resistance area up above. And that's, one of the ways that we can go about our operations, framing out perhaps some of these items in the overnight session. And then, of course, when the market makes its move, it gives us new information, and then we can kind of adjust our bias or our expectations accordingly. But this is one of the this is the screen that I keep up for most of the day in the trade room, and it's very easy for me to toggle between charts. This is our DAX up here on the top left, which I'm sure many of your viewers would be familiar with, our trusty DAX. And what's nice with the DAX is we can use it for a early morning guide or just another index to keep a watch on during that U.S. morning session. So that's 7 o'clock to 9 o'clock Eastern window. The DAX does serve us quite good value, especially if watching up against our S&P activity. And whilst we're on that topic, we mentioned what I'm up to these days, and usually I'm sitting behind the screens. 7:35, 7:40 in the morning is kind of when I start to sit down, perhaps see what happened during the overnight session, start to adjust my charts, and then basically the idea is to be, all geared up and ready to go at 8 o'clock. I come on in the morning and I do a market overview at 8:15, but that 15-minute period or 30-minute period from 7:30 to 8 o'clock up to 8:15 is quite critical. Getting yourself all adjusted and geared up for the full day ahead of us. So that 8 o'clock is kind of our U.S. morning start time for the day over here in the states. So that's kind of just a glimpse at what we have going on here on this particular screen. Some of the items that I like to keep a closer watch on. And yeah, you can see it's nothing too exciting or too complex, just enough but not too much, just enough to give us the insight and value that we need, but also don't want to clutter the charts, because if we are getting a particular movement or setup, we want to know that it's just that particular oscillator that's responsible for it. If you have too much going on, it'll be hard to derive too much statistical significance from one particular pattern, because you have a mixture of things going on. So sometimes stripping away some of those layers and keeping it simple, going back to the basics, can be quite helpful for the trading activities as well, and your confidence factor. Sometimes going back to the elementary style in school can get you that foundation back, and then you can start to proceed from there.
Definitely a lot there that you've covered. And it seems to me like you're using the Kepler channels for potential trends happening in the market, right? Because people could look at reversals with these channels, but you're using them for kind of finding out some possible trends early.
Yeah, and that's a great way to put it. Like you had mentioned, perhaps some people might look to do fade trades or breakout trades with the Keltner channels, or just the standard deviation functions in general. And to your point, there's a lot of things that arise from this. Let me see if I can scroll back my data here and find I don't want to go cherry picking too much here. This was during the Globex session during the overnight, so this is a nice example where the counter channel can serve us. So here we are, like we said, this is during the Globex session, so a tad more quiet. So we have to take this with a grain of salt. But what we saw here, let me grab my little handy drawing pen here. So we had our push outside this lower Keltner channel here on our 5-minute data, also denoted by a swing down in the oscillator, our derivative of price, so giving us the idea that we had a pretty decent swing to the downside, essentially this little high to low swing, our counter-reactive lift, or perhaps a bear flag, and then our next swing down. And that second swing down also gave a push outside that lower Keltner channel. So we had the push outside lower Keltner channel, consolidation, and then a shortening in the length of the swing, but still pushed outside the Keltner channel. So what we have going on here is the idea of the divergence, our momentum divergence. And it's really nice when we see these M or W shapes into the Keltner, because for momentum divergence, this always sounds a little cheesy, but for a momentum divergence, you actually have to have momentum to diverge from. And what's an easy way to see if a market has good momentum is that push outside that lower Keltner channel, because it's moved far enough away from its average. So here we have signs of good momentum to the downside, brief consolidation, and then our next swing down. And this also goes back to the idea of oscillators showcasing what we already see in price. I'm sure if you put up a MACD or a stochastic, any derivative of price on a slower, on a quicker look back period, is going to showcase what we see here swing to the downside, little reaction up, and then shortening in that second length of that swing. So we were left with some loss of momentum divergence. And what the typical response is some type of reversion back to the average or towards the mean. So in this case here, to your point about asking, about how we can utilize these Keltner channels, they're very helpful in aiding us with these divergences or losses of momentum. So we proceeded to form a little footing and then reverted back towards our moving average, or this gray line here, this 20 period exponential. And this is just speaking on the 5-minute data. But what is nice is that we'll see that same principle play out on a variety of markets and on a variety of time frames. If I were to just grab, I just happen to know this from the overnight. Here's an example with the gold. This is the 120-minute time frame, or the 2-hour chart on the gold. Not quite as seductive, if you will, but similar. Impulse bar up, push outside that upper band, upper Keltner channel, brief consolidation, and then our next swing to the upside. And this one was a tad more on the mild side, but we can get the same feeling of these slightly lower highs in the oscillator, from swing high to swing low, large swing up. And then this one was just on a slightly smaller swing, or a slight less amplitude or magnitude to that second swing. So a very brief loss of momentum, and we could see all we did was come down here and revert back to our moving average. But another case where these Kellner channels help us to see that the market has momentum in the first place. I alluded to the fact earlier that in my early stages, I would see many divergences, or would refer to many things as being divergences. And what I would get into is perhaps, let me find a little example here, where we get clustered around the moving average. See if I could find one here on the fly. And it's, just speaking to some of the experiences that I had myself. This is not the greatest data to work with, but I could just work with something on the fly here. So basically, the idea being is that when we're centered around or inside our bands of the Kellner channel, centered around a moving average, you might start to see what gives the appearance of a higher low in the oscillator, perhaps something like this here, where you have a feeling of a higher low, but we're really in the middle of this consolidation phase, or centered around this moving average. So that gives us more of the two-part wave or two-part consolidation feeling, the A, B, C down, as opposed to looking at that as much of a divergence. So if you compare something like that, where you're in the middle inside the bands, compared to something like we saw with the gold, which actually had better swings to the upside, better pushes outside that upper Kellner channel, lent itself to a better feeling of that reversion to the mean. Because like we said, if you're centered around the midline, we don't really have too much to diverge from. So a nice question there regarding the Keltner channels. And it did take me some time to really get a grasp on them, because there's so many things that come to them, not just divergences, but we also spent time doing research and studying the times where we might have a push outside the lower Keltner channel, or the upper, and then we start to proceed to have a counter reactive move. So we've studied times where you get the push outside the Kellner channel, and then you start to come back down and take out the bar that penetrated it. So you had your close outside, and then if you start to come back down and close beneath that bar that penetrated outside, it can also at times be indicative of that reversal feeling. A little Keltner channel reversal is how we coined it. And that brings a whole nother can of worms there, because when we did our studying and our testing in that arena, we did come to find that those reversals tend to work better during the early morning session, prior afternoon when we're more prone to the price discovery phase. Markets more prone to testing in both directions, getting some larger swings. So those Kellner channel reversals happen to test out better in the morning session, whereas in the afternoon, like you had mentioned, perhaps indicative of a trend starting during the afternoon. The pushes outside those Kellner channels can be signs of good momentum and perhaps continuation or follow through, as opposed to the morning where we would be more cautious about that counter reactive movement as opposed to the afternoon. So a whole host of things come to mind there with the Keltner channels, since at the end of the day all they're doing is taking into account the average range of the bars and just plotting that 2.5 average to range up and down below a 20 period EMA. So you can start to develop, and like we said earlier, kind of studying these things for yourself. I'm sure if you put them on your chart and start to look at them deeper, you'll come up with a whole host of things to take a look at, or that might stand out to you. Perhaps you have a particular setup or technical pattern that you really like to look at. Maybe it's one of your favorite things, and maybe you overlay a Keltner channel and you start to realize some other different things. So putting your own spin on it once again, but certainly a nice indicator or proxy to keep up there on the charts. And I usually keep it up on most of the intraday data, not so much for the daily time frames, but 5, 15, hourly, 240. Typically, if you see one of my charts there, it will have a Keltner channel alongside with it there.
So cool we talk about this because this is kind of how I trade. The same thing with these. I use Bollinger in a very similar manner, looking for reversals. So it's cool we talk about this. I'll definitely have to have a look at the things you mentioned after. Some pretty cool things there. But that's kind of what I'm doing also. Yeah, good tool here.
And just to put them up at a glance, I know we can see that they're quite similar in their nature. So they're quite helpful. And really, the only difference between the two is that the Bollinger Bands are just based on standard deviation, and the Kellner channels average true range. So very similar in their directional and their feel, just perhaps a tad smoother there on the Kellner channels. But those Bollinger Bands can serve equally as well there.
So we kind of discussed this a bit earlier, but what would be like your routine or your day in the life as a trader? Like, what are some things you do? People are gonna wonder, like, are you just showing up in the market like every day quickly and then taking trades, or is it more like preparation, like you said, the day before? What does that look like overall? That like day to day of trading full time?
Yeah, absolutely. So great question. So I mean, we can even start off with something as simple as here in the evening session. So what I'll typically do is start off here with our daily charts. I'll go through, like we had looked at here, our trade sheets. So I'll kind of go, one by one through each market and kind of go from a top-down perspective. So start off with either the weeklies, usually more so the dailies, since the weeklies take more time to develop and form. But I'll usually go in here with the daily bars and start to frame out what would be pertinent for tomorrow's trading. So, for example, if I'm just looking on the fly here with these S&Ps, I would say that we had obviously a test down early this morning, then we proceeded to close at the upper end of our range, taking out the previous day's high. So my purposes for tomorrow, what I might keep a watch on or put down on the playlist there, is that we had this nice movement to the upside, came in at the tail end of the day, and what I might look for is here on the hourly time frame, push outside that upper Keltner channel. We would be monitoring for some consolidation to take place during the Globex session. So this is something that I would frame out. Perhaps if we consolidated closer towards our gray line, our exponential moving average 20 period EMA. And then what I would be looking for tomorrow, should that unfold in the Globex session, I would be keeping an eye on, or I'd have on my game plan tomorrow for perhaps a partial retest back up on the S&Ps if we get down too far during the Globex session. So that is twofold. One, that gives us a little something to work with for tomorrow. And then when we come in the morning, one of two things: either one, we'll have given back a whole lot of ground. Perhaps we retrace the entire impulse move and we come down to 39.50. In which case, tomorrow in the morning, I can adjust myself accordingly. Okay, we gave back most of the impulse bar. Let me be respectful of that and perhaps keep a watch on our previous day's low. Or the flip side, also, we can have a case where the market perhaps unfolds overnight. Maybe we get the full test back up overnight. because we never quite know in advance as to how the market's going to resolve itself. So if we are, looking for consolidation and then during the U.S. morning a test up, but perhaps we get the test up during the Globex session. So then we can come in the morning and adjust ourselves and say, okay, some of that lift or continuation occurred during the overnight market. So perhaps we can allow ourselves or adjust our game plan to maybe if we get too far to sell short initially. If we're too far above that high, maybe we look for a short trade first, or if we're not too far marked up, perhaps still looking to buy a pullback. So that's some of the initial operations that I would go through. Typically would use a daily alongside with an hourly or a 120-minute data to start to frame out what could be unfolding going into the next day. And then the day, starting the day off, we come in the morning, 8:15 Eastern. I basically do the same rundown. I go through each market, the prominent levels for the day, the data points that we might want to see tested or would be significant. And then going into that opening, that 9:30 Eastern, or even beforehand, like we said, that U.S. morning does present itself with some good opportunities. But going into that NYSE opening, that 9:30 Eastern, what we're going to want to take into account, what does the market look like according to our game plan from the overnight? Are we looking for a test of perhaps the previous day's high? If so, how far are we opening away from that reference point? Are we getting impulse up or down off of the opening? What's the volume looking like? So it's taking some time, but it's almost autonomous going through this process. We talked about the importance of a process. So off the bat, we got the 9:30 opening. We immediately look at what the opening price is. Of course, that's pretty standard. Are we having a gap down or gap up? If so, how far is the gap or how large is the gap? Easy components, pretty standard. And then, like we said, are we getting impulse? Is there urgency off the opening price? Are we putting in consecutive higher highs and higher lows on our 5-minute data right out the gate? Could be indicative that the market has urgency, maybe the makings of a trend day. And then from there on, that kind of brings us to that first 15 minutes of the day. And we didn't talk too much about this, but the first 30 minutes, this 10 o'clock Eastern Standard Time, 30 minutes after the NYC opening, presents a real interesting point in the data. It's our morning inflection point. A lot of activity takes place there. Typically, what we'll see is either the feeling of a test reject during that price discovery phase. We could be aware of those Kellner channels, or we get some continuation on the other side of that first 30 minutes, giving us better feeling of early morning trendiness. So the process of, of being a trader is, being able to orient the day and make it so you can have your own understanding of what we have going on. So opening price, is there impulse? How do we handle that first 30 minutes going into the 10 o'clock? And then thereafter, of course, we can have plenty of trades and technical patterns along the way, but just kind of speaking about how we go about the day or what the process is during the day. And then we have the 11:30 mark, which is what we would refer to as the Europe session close. So what we oftentimes see during that time frame or that time window is sometimes the, call it quote unquote, pausing of the early morning trend. So if we did get that impulse off those first 15 minutes, we got continuation at the 10 o'clock Eastern. As we start to dwindle into that 11:30 mark, some of the European participants are leaving for the day. Since futures are a globally traded market, it's good to take into account the participants that we have there. So when the Europeans start to depart for the day or they have their close, sometimes there's a lightening up of positions. Perhaps if they're just day traders, they're lightening up for the day, closing up shop, getting ready to go home. So what we can do is be on guard for that. Lighten up our positions, perhaps if we are so grateful to have a nice swift swing to the upside in the morning, and then kind of dampering our expectations as we go into Europe close. And then also we talked about divergences. That's also a real nice time to be on guard for any momentum divergence from that early morning session. So that's kind of brings us, that's the kind of the meat and potatoes, that core of that US morning session, that 7:45 up until that 11:30 really presents us with numerous opportunities. And you also have the currencies quite active as well. There is play in the currencies in the afternoon, but during that morning session, when we have those European participants around, we really do get some nice swings in the currency group. So that's a little idea as to the operations. And like we said, should we be so lucky or grateful to get a nice push outside our Kellner channel in the early morning session, that automatically brings it to our attention, seeing if there's a tradable pattern or setup to work with. So about the process once again, if we are, if or for myself, if I am in a position, closer to off the opening or early in that U.S. morning session, I would perhaps, look to lighten up or bring in the expectations around that Europe session close. And if everything pans out okay, that's fine. And then we can kind of re-gear up and reestablish ourselves for the U.S. afternoon, kind of the after 2 o'clock p.m. Eastern time. Sometimes we get a second pickup in activity as the market goes into those last 2 hours of the trading day. So that's just a rough idea. It's taken me some time, but I've gotten that process pretty well established in myself. So it's like I said, autonomous for me. It's like going through the same motions. The repetition of doing the same thing each day has really helped build confidence because you start to see these things over and over, and then every once in a while the stars align and you do get a nice technical pattern into a good time of day window. You have the confidence on the higher time frame, it's fitting into what your game plan was the evening before, and then you're able to jump onto that and feel really confident, put the trade on, and not always do the stars align, but when it does happen, it's good to be prepared, and that you're able to take that opportunity and maximize it on the best way that you can.
And how do you identify when the market shifts from, let's say we start with like a downtrend for the day, then it shifts to being an uptrend? How does that kind of play out, and what do you do with it? Do you trade that kind of switch in trend, or do you kind of wait until you see something clear and then get in the trend on the other side?
Yeah, that's a superb question. So the process of the trend reversal, if you will, certainly is a process. So by nature, we typically have traders falling into a couple baskets. Whether you're a breakout trader, buying a nice breakout, or perhaps you're mean reverting, so looking for those divergences, the fade trade, things of that nature. And then you also have your momentum. So buying the pullbacks, your bull flags, consolidation periods, looking for that next test up. So we have all these different school of thoughts when it comes to our operations. So for to your point, if we have something like a trend reversal, typically for myself, I've found most success from really trying to stick to one side. For instance, if we have a long side bias in the evening session, and the next day starts to line up and is trading well, low to high with an upside bias, and really like to stay on that one side, because for myself, I find it difficult to kind of flip between the two, going from short to long. However, as you had mentioned, there are exceptions to that. When we do put in that process of the trend reversal, which would include, don't have one on the fly here, the feeling of two higher lows. See if I can snag one here on the fly. Two higher lows, and then we take out that high, and that's going to give us that feeling of the trend reversal. Don't quite have one on the fly here, but with that said, so if we're detecting that, and to your point, so say we have this early morning trend, and then we start to soften up around that Europe session close, and then we start to get this counteractive movement, kind of similar in some sense. We kind of lifted right up off the opening in these S&Ps, but not too dissimilar from what we saw here today, giving this strength in the afternoon session after coming down pretty heavy during the Globex session. Forgive me, I'm just scaling these charts here. So adjusting ourselves from coming in when we're fairly marked down. There we are. So this was some of the activity that we had unfold during the Globex session. So we've been testing down in the Globex session. We could see it's a bit of a process here. This was our kind of first higher low that we had on the 5-minute data, and we proceeded to put in a second higher low, and it wasn't really until this data point up here where we started to take out that early US morning high. coincides with that 8 o'clock Eastern time of day. And we really started to get a better feeling of, bringing that trend back to the upside. So you have your one higher low, two higher lows, and then taking out that high. So it is quite a process, and then we also have a couple tools or tricks to help monetize on that when we get these counteractive moves in the afternoon session, where in which case we might be for instance, if we are selling down off the opening price for a good portion of the day. So we open at 9:30 Eastern and we're selling down up until perhaps the noon hour. So a little after Europe session close, maybe we get some price bar overlap, and then we start to see the market coming back to life, coming back up towards its morning range. A few things there. It's not perhaps super statistically significant, but for myself, I like to watch the halfway point for the day. So from high to low, taking that midpoint, and if the market has been down a good portion of the day, and we start to come back above that 50% mark, it's kind of just like a mental note. Okay, this market has really improved. It's come back a long way. And then also, just a few, this is more on the technical trick. We have a case where, or a little model where if you are down beneath the opening price for a good portion of that morning session, and then you start to make new pit session highs in the tail end of the day in the afternoon, meaning that counter reactive movement, almost like the feeling of the V. So I'm just going to use this little line here. So we're testing down off the opening, perhaps some brief consolidation to mile down, and then we start to lift back up into the afternoon and come all the way back up to take out that early morning high. And also, we use the VIX for this as well. And if you get that VIX to confirm by making new lows on the day, that can be a go with mode. So that allows us the ability, if you will, or the nimbleness to be able to monetize on that counter reactive movement. So despite, perhaps wanting to mainly trade from one side of the market during the day, if we started to see a configuration to that magnitude where we're making such a counter reactive movement coming back above those morning highs at that point, we can then adjust ourselves and say, okay, this is more likely a go with mode, in which case we would shift our morning bias, which may have been to the downside. We were trading to the short side most of the morning, and we see the market really springing to life on the other side of 1 o'clock or 2 o'clock Eastern. At that point, I would myself feel a little bit better about shifting the expectations as opposed to that morning session where I find a little more success sticking to one side. Whereas that afternoon, kind of to your point, since we do get a lot of these afternoon counter trend movements, we can adjust ourselves if it fits into our kind of statistical framework, which would involve us being below that OP most of the morning, coming back up, making pit session highs in the afternoon, and getting that VIX to make new lows. At that point, I've seen it, and this kind of goes back to, once again, with the statistics and confidence in doing your own work. I've seen it play out enough times, and obviously I've gotten a lot of this from working with Linda, so I've seen it on my own eyes, but also working for her, and have built the confidence out enough to shift that bias from the morning, even if it was to the short side. I've seen that particular technical or pattern play out enough times where I would feel better about shifting that bias or the way in which I'm trading, perhaps going to the long side there at the tail end of the day. But a fabulous question, because that can bring to account a lot of over trading if you're trying to flip flop between going long. You start to test to the upper end of the range, and then you think we're going to break out, and then it ends up coming back down. So, trading from one side can help at least dial down the over trading tendencies just a little bit, since you're not flopping back and forth quite as much.
Definitely a lot there, and I could hear you talk about this probably for hours because this is really interesting stuff and really good stuff. But I want to take your time. We're already like an hour into it. So where can people find you if they want to connect with you or reach out after the interview? Where can they see your work and kind of connect with you?
Yeah, absolutely. I don't have too much out there. I do have a Twitter handle. It's Kyle Potter 9. It was just a default one that Twitter had made for me. And then we also have lindaraschke.net/Damon and Kyle Trade. Damon and Kyle Trade is the name of the service that we provide during the day. Like we said, we go 8 to 4 o'clock each day. So we do all. This was kind of like a glimpse of some of the items that we dive into. So we do a lot of work with the Keltner channels, our swing highs, swing lows. So certainly those are kind of the main places there. Perhaps Twitter, and then Damon and Kyle Trade would be the primary areas to reach me. And you're more than happy to share my email if there's any questions that arise on particular items. I'm always more than happy since the trading community is truly great, and I have to give back as well because I'm still very early on in the curve, so I know how difficult it can be on that early journey into the trading arena. So yeah, always more than happy to reach out to peers in the same area and help expedite that learning curve or increase that confidence factor as much as we can.
Awesome. I'll definitely put links below the video and the podcast channels for people to check it out after. And the interview with Linda would be probably the best one to watch after this one. I think it's going to be a lot of the same things we discussed so far. So that's a good one to watch. And Cal, I appreciate your time. I appreciate the advice you gave here to my listeners and look forward to catch up with you pretty soon and see how you're doing in the future also.
Yeah, absolutely. It's been an honor and a pleasure. And like you had said earlier, it's nice to finally make an acquaintance. I know we've been having this in the works for some time, so it's been a real pleasure being here. And it's really nice to finally, put a name or put a face to the name. So thanks once again for having me. And thank you all for those of you joining and viewing. Thank you all for your time as well. It's truly appreciated. And these markets never cease to amaze us, always full of good fun.